JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 16th of October 2020, so yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So, now then, jumping into the charts. Now, a quick update on Nikkei. I spoke about this one, I talked about this one this week. So, basically, Nikkei is declining. It closed this week already in the red. However, managed to remain above this upside support line taken from the low, the 31st of July. Now, another idea that I've mentioned to you guys as well this week was that keep in mind that there could be a possibility of seeing maybe this rising wedge pattern here, which I've drawn on the chart. However, we cannot really talk about the downside yet. Well, of course, as you know, these patterns tend to be more bearish than bullish. So, but we cannot talk about the downside until we get a violation of the lower side of this pattern, which in a way also means that this upside line would get broken too. So, in kind of all stacks up here. In addition to the downside idea, well, a nice good drop below this 23,272 territory could do the trick for more sellers, and more of them could be joining in here. That's the low of the 7th of October, and further declines are possible. For now, at this point in time, as long as this upside line remains intact, there is still a chance for this index to reverse, rebound from this area, and move higher again. So keep that in mind as well. Shanghai Composite now. This one is an interesting one now. This week, I talked about this one, and in the beginning of this week, when I was saying that basically keep your eyes on this potential idea of a possible bullish flag here. Now, we do have a nice pole here, which was the Monday's candle, and then what I was saying on Tuesday and Thursday and Wednesday that if the index decides to decline here in the remaining days, but it will be something like this with small little small-bodied candles, small-bodied daily candles, then, well, keep your eyes on, like I said, on this potential idea of seeing a possible bullish flag here, which at the moment it seems to be the case. However, just to be a little bit more on the safe side, preferably a break above this highest point of this week here near the 3,361 zone would be ideal in order to consider the upside. However, again, like I said, for now, we're not really doing anything, we're just observing the price action, because even with a downside, I would prefer to see a drop below this 3,280 territory first, and then, yep, we could consider a move to the downside. Jumping into German DAX just to see how everything's getting along. So yesterday the index drifted heavily to the downside. It found support just slightly below that 100-day EMA, shown as the green line, from which, as you can see, it rebounded and ended the day below this 12,728 territory that I talked about previously. That's the low of the 5th of October. So if we take a look at the cash index and where it's currently trading at, we'll see that the price is actually stuck slightly above this hurdle. So in a way, given the fact that it's still trading below that that overall below that 13,000 zone, and also below this 12,842 territory, now still the downside scenario is a more likely one at the moment. However, what you should keep an eye on as well is well, this idea. Let me just quickly draw this one for you. So first of all, we do have this upside line here, but that's not the main one that I wanted to focus on. What I wanted to show you is that we could be seeing here overall a nice rising channel pattern. So let me just zoom out here. There we go. So something like this here could be possible overall, so which means that even if it drifts lower, if the index tests the area somewhere near this 12,540 territory, or like I said, this this lower side of the rising channel, then we could see a nice rebound and a push back to the upside. So in other words, for now, my main idea will be somewhat like this, guys. And then if we do see a test of this lower of this lower side of the rising channel, yes, we will be very careful here, but if it rebounds, then it could move higher again. So if this upside line, this lower side of the rising channel breaks, then of course, yes, we'll start considering maybe the downside, but I'll get to that point if we actually see that test of this lower side of the rising channel. So keep your eyes on that one. Jumping into another index, and this one is the dollar index. So this is what I was talking about this whole week, guys, and I was telling you to keep a close eye on this downside line taken from the high of the 23rd of March. As you can see, the index got held yesterday near this downside line again. Today we're seeing just a fractional move above this downside line. However, I would prefer to see a push above this 93.91 zone before examining higher levels. For now, I'm going to take a bit of a neutral stand, although yes, it is quite tempting to look at this one more to the upside. However, I don't want to get the same story here as we had in the end of September, where the downside line got tested as well, but then it kind of reversed back down. So that's why I'm going to be a bit on the cautious side. In terms of the downside, I would prefer now to see a drop below this 93 territory, somewhere around here, and then consider further declines. For now, yeah, for now it's a bit of a tricky one for the downside. With the upside, yes, it's more likely. However, let's wait for that confirmation break. The little thing that kind of supports the upside scenario here is this RSI. If you can see here, it kind of got back above this upside line that was broken, and yep, now it kind of indicates that there is a possibility of this one pushing further north here. The RSI is also above 50, which also kind of puts the price momentum in positive territory. So again, let's, of course, all this is kind of leaning more towards the upside, but again, let's wait for that confirmation break first. Silver is and this is exactly what I kept talking about, and this whole week about silver. Basically, yes, yesterday we broke this upside line, but as you can see, that's the reason why I was telling you guys all this week that I would prefer to wait for a drop below this 22.89 zone before considering lower areas, because this would be a bit of a more of a safe game to play, because at the same time the price would be placed below the 100-day EMA. Yesterday we got a break of this upside line, but as you can see, the bulls were quick enough to kind of push this one back up, and the price kind of stayed above this upside line. So now, of course, it might attract a few more buyers into the game here. However, as I said, I would like to be a bit on the safe side, and prefer to wait for a push above this 25.24 territory first before examining, or should I say, before getting a little bit more comfortable with the upside. Jumping into WTI oil, also quick update here, and look at this beautiful move back up here, and yesterday I was talking about this one in my trader's tea time, and was saying that in a way, given that it got closer to this key support zone near the 39.07 level, there is a chance for this one to move further south. However, as you can see, this is that's why I always like to wait for the daily candle to kind of finish, just to see what we could actually expect. So, and you can see a huge reversal back up. The commodity got closer again to this key resistance area near the 41.46 zone. However, the only little problem here is that the price is currently trading below the 200-day EMA, which kind of puts us in a bit of a probably a bit of a neutral territory here, because we cannot really talk about the downside until we see it break below the 39.07 level, and we cannot really get comfortable with the upside, because we need that confirmation break of the 41.46, and that puts us in a bit of a bit of a pickle, I would say. I mean, a bit of a neutral spot, and that's why we'll sit this one out and wait for a confirmation break. Bitcoin. So I talked about Bitcoin this week, and this is the scenario I've mentioned, that we could see a bit of a correction lower. However, if this 11,185 territory does provide decent support, then we could see a nice reversal, a push higher, and maybe a test again of this the current highest point of October near the 11,740 mark. But of course, all eyes right now are on the 11,185. If that holds, then yes, this is the scenario that I'm going to consider. But if it fails to provide decent support and breaks, and the price continues to slide below the 21-day EMA here, then yeah, a possible test of this upside support line taken from the low of the 8th of September could be possible. A possible support could be possible. Well, there we go. I mean, too many words here in this sentence. So basically, we could see a nice move towards this upside support line, guys. So, and still, even then, I mean, this move could still be seen as a temporary correction before another possible move higher. If you want to look at larger extensions to the downside, then well, a break of this upside line would be needed. But again, let's keep it short and simple for now. Let's see how this level here, 11,185, will play out. If it holds, yep, a nice rebound here could be possible, but if it breaks, then a further decline, we could see a further decline. There we go. Now, jumping into a few pairs. AUD USD, so the pair continues to slide. Of course, the weakness in the Australian dollar is kind of kicking in a little bit here, and the recent strength in the US dollar, that's the as a result of we're getting. So after finding good resistance near this downside line taken from the high of the 1st of September, the pair drifted back down, and well, this is kind of working out nicely so far. So what I was saying previously, when we were still hanging around near this downside line, that if we get a drop below this 0.7192 territory, then yes, consider a potential move towards this the low of the 6th of October near the 0.1797 area. If that gets broken, then yep, the next target here is this 100-day EMA, or this 0.7064 mark, which is which marks the high of the 10th of June, and is also not far from the lows of the 24th of July and 3rd of August. Now I can see that this is where the current holdup is occurring. Yesterday the pair found kind of good support here. If the slide continues and we see a break below this area, this key support area, now this is where it could become a little bit more interesting again for the sellers, because this could open the door towards this the low of the lowest point of September near the 0.70 territory. So again, let's keep an eye on this one. We're very close to this key support area here, so let's see if that gets broken, and if so, can this pair move further towards that psychological 0.17 territory. So USDCHF, I haven't looked at this one for quite a while, but here what you see here is a potential bullish kind of flag here, which could be working out. However, as I mentioned to you before, that a break above this, well, actually this, I haven't looked at this one for quite a while, and basically, yep, we can see that the lines have kind of, my arrows have shifted a little bit here. So what's the more interesting here going to be that if we get a pop above the 0.9163 territory, now this is where it could become a little bit more interesting for the bulls, and yep, this would confirm a forthcoming higher high. This would place the rate above the 21-day EMA, of course, and yep, higher levels here could be met. Now initially I'll target the 0.9197 or the 0.92 zone, but if it continues to travel higher, then the next target here could be that 0.9218 mark, a break of which of course may open the door towards even further for a further move higher. But at the moment, guys, be very careful. The pair, yes, is showing willingness to move higher, but it still needs to overcome that 21-day EMA, which, as you can see, this week acts as a very nice area of resistance, and we need to see a push above this 0.9163 territory as well. EURUSD. Now here the opposite is happening. The pair is drifting lower, but the most important here is that when I last time talked about EURUSD, we were still trading in this range, and when I was saying that if we want to consider maybe a bit of a further directional move here, either to the upside or to the downside, we need to see a violation of one of these sides of the range here, and also ideally would like to see a daily candle kind of remaining below, either below this area or below this upper side of the range. So we got to break through the lower side. The daily candle remained below this 1.0717 zone, so now it kind of there is a chance for this one to move further south. And from the very short-term perspective, first of all, what I'm looking at here is that if it struggles to get back above this 1.0717 territory, then yes, another slide here is possible. But if you want to be a little bit more careful, wait for a drop below the yesterday's low near the 1.0688. Now, don't get me wrong, I mean, it might not happen today, and might maybe end the week somewhere around here, maybe could end Friday somewhere around here. But if next week, for example, we get a nice drop below this 1.0688 territory, now this is where it could become interesting, because a forthcoming lower low would be confirmed, and this could slowly kind of grind towards this 1.0606 territory, marked by the lowest point of July. But again, we would need to see that drop below this 1.0688 level first. In terms of the upside, of course, if it gets back above this hurdle, above this barrier, the lower side of the range, then yes, yeah, we could maybe consider a bit of a move higher. But even then, we'll be very careful, because there are a bunch of obstacles here on the way, like all of these EMAs, for example, and of course, then we could examine this downside line too. So that's why maybe a break of this downside line could be maybe that ideal scenario, after which from where I would say we could aim then further north. But at the moment it's kind of a tricky one. It's leaning a little bit more to the downside, especially if the rate continues to trade below this 1.0717 territory. So keep your eyes on that one. Now, Euro GBP. Now this one is a roller coaster madness, honestly. This is so last week I talked about this one. This week I keep saying the same thing, guys. Keep your eyes on this possible falling wedge pattern, which according to all the TA rules tends to be a more of a bullish indication. So again, once again, we're getting that break of this this upper side of the falling wedge, but in this case now we actually got the daily candle closing above it, above this area. So the only little problem, of course, is right now this 21-day EMA and this 0.1990 level. The rate currently is trading below this area, so in order to aim for some higher levels here, we need that confirmation break above this territory. For now, even even then, if you get a break above this territory, stay careful, because what we don't want to see is what we had here, for example, on the 14th of October, on the 9th of October, and on the 7th of October. So these false breakouts did probably take out a lot of traders here, because we had then a very strong reversal back down, so a lot of stop losses were triggered probably. So that's why, but to be honest, we rather have the stop losses triggered rather than this could go further against us. So that's why for now, yes, I'll look at some higher levels again, because again we did break this falling wedge pattern through the upside here. But just an additional confirmation, a push above the 0.1990 level here would be ideal in order to start considering the upside. And finally, EURUSD. So here we can see that, and if you, by the way, here you can see that the euro is currently stronger than the pound. However, we can see on this pair that the euro, the common currency, is struggling against its US counterpart. Now, this whole week I talked about these two levels. I'll continue talking about these two levels. I don't know if you're already tired of me saying talking about them two, but still, to be honest, as you can see, this is exactly what I meant, that before kind of examining the next kind of short-term directional move, a break through one of these levels is required. Ideally, a daily candle staying either above this 1.81831 zone, or above or below this 1.1696 territory. Yesterday we had a small little break below this, but as you can see, the pair kind of quickly drifted back up, not much, but it remained close to this hurdle. So if today we get another slide here, then in a way this increases the pair's chances of potentially sliding towards this 1.1612 zone, or this 100-day EMA, which kind of in a way coincides with that 1.16 zone. So again, good potential target here, but a confirmation break here is required. So that's why for now, be very careful on this one, be very cautious, and yep, keep your eyes on the price action, and of course, like I said, keep your eyes on some of these levels. If by any chance this pair reverses back up, basically as long as it stays in between these two levels, I'm going to take a neutral stand and just continue observing the price action. But if we do get this drop below this, then yep, it could be quite interesting. Like I said, keep your eyes on DXY as well, because if this pushes higher further, then yep, we could see EURUSD dropping here towards this 1.16 territory. So guys, I hope you found it useful. Thank you very much for watching and listening. Thank you very much for joining in, of course. Now, if you want to catch my video later on, my traders tea time is always 13:15 GMT time. For now, guys, I hope you have a wonderful trading day. Stay safe and be very careful. Have your stop losses in place. And I'll see you later. Thank you very much, and bye-bye.